back. It's time now for Past Picks. Shane visited with us on July the 22nd of 2022, about a year ago exactly, and his top pick on that day was Nvidia, ticker symbol NVDA on the NASDAQ. And I think most of us know what's happened to Nvidia over the past several months. There you see the numbers, up 147%. Shane, I think the question a lot of viewers might be asking is, do you buy now at 428 and change US?
Buying now is always a tough question. For us, we actually have been adding recently. So we've held this name for a while. We used to own more at the end of 2021, but anyways, it's a great story. We knew the AI angle, and then it's been swept into this new wave, right? So the bottom line is this: they're dominant in the GPU space. You need GPUs for AI. If you're starting an AI company, you go to Nvidia. If you're building in-house AI capabilities, you go to Nvidia. So they're not the only game in town. We think that eventually the excess demand is going to go to other players. Maybe AMD can start making inroads in the back half of the year. But Nvidia is a great company. That recent quarter was one of the best I've ever seen. And the interesting part was earnings growth estimates got ratcheted up so much after that print that even following the stock's rise, which I think was top 5 single-day gains in market cap for one stock ever, the valuation went down. It's still very high, but if we're talking about slightly under a 50 times forward multiple, that seems very high, of course, at first glance, but the long-term earnings EPS growth rate on Bloomberg now is over 40%. So with that lens, it's more reasonable. Okay. Great company.
Number 2, Motorola Solutions, ticker symbol MSI on the New York Stock Exchange. There's what we see in that story, less under the spotlight perhaps than Nvidia, but you can see a 32% and 33% return respectively, depending on whether or not you include dividends.
Another great company, another name that we fully intend to continue holding. So they made their the historical business, the cash cow is radio communications, which seems like a pretty boring business, but there's an element of mission critical here when we think about police and firemen and security, et cetera. So that's kind of the cash cow of the business that's continuing to grow, actually defying the skeptics at a, call it mid-single digit rate. But the more interesting sides, or what we were interested in, was kind of the hardware, if that's hardware to software transition. And the most interesting part to me is the video security cameras. So we know that public safety is top of mind as we get more and more people in the big cities. Unfortunately, sometimes bad things happen. Mm-hmm. And there is a privacy element here. You can have different opinions on that. My personal opinion is I think people will choose safety over privacy. If you're filming me walking down the street, I'm all the way on one end here, so I don't really care, but I think public safety is a really interesting thing, and that part of their business, the video cameras, which is still small. I think it's only about over $1 billion now, but a small part of the business growing 20%.
Okay, we'll go to past pick number 3. We go to the luxury segment, LVMH. That's the Louis Vuitton company. Trades in Paris. We see some pretty good numbers there as well. There are the respective prices a year ago and now in euros, and you can see the gains of 34% and 36% respectively.
Still another core holding for us that we have no intentions of selling. I guess one question is about Mr. Arnault's succession and how that eventually happens. I think he'd like to give pieces to his kids and whatnot, but he is one of the best operators that I've ever encountered in the market. And so it will be difficult to replace his legacy, but this is a great company. It's basically a holding company of various fashion houses. They have, in my opinion, the best portfolio of luxury assets. So they work across different areas. Their most profitable one is fashion and leather goods. You'll know the Louis Vuitton brand, and Dior looks like it's gaining market share as well. Wine and spirits also highly profitable. They were able to execute right through COVID, and unlike other areas that are more subject to the normal laws of economics, they've just had insane pricing power. You raise prices, people want your stuff more. It's very counterintuitive, but that's the luxury business for you, right? So all of that has resulted in operating margins that are at record highs. So it's been great execution and great brand strength. So great portfolio of assets. I think as long as they continue doing what they're doing, it's a good company.
Okay, those are Shane Obata's past picks. Shane, of course, is portfolio manager at Middlefield Capital. He'll continue taking your questions on global large cap stocks right after this.